A looming announcement: Nvidia's Q4 earnings. The semiconductor giant Nvidia is set to announce its Q4 earnings on February 26, 2025. This announcement has the potential to move the stock market significantly. Investors are eagerly awaiting to see how the company performed during the holiday season, a period typically strong for tech companies. Nvidia's performance will provide key insights into the overall health of the technology sector. It will also shed light on the demand for the company's highly sought-after graphics processing units, or GPUs. These GPUs are essential for various applications, including gaming, data centers, and artificial intelligence. The anticipation surrounding this earnings announcement is palpable. Investors and analysts alike are holding their breath, wanting to know if Nvidia can continue its impressive growth trajectory. The company has consistently exceeded expectations in recent quarters. The stakes are high for Nvidia as it prepares to unveil its financial results. The market will be watching closely for any signs of strength or weakness, which will dictate the direction of Nvidia's stock price and influence the broader tech industry in the coming months. Riding the wave. Nvidia's stellar track record. Nvidia has a history of surpassing Wall Street expectations. The company has consistently delivered strong earnings reports, resulting in significant stock price appreciation over the years. This impressive performance can be attributed to several factors. Nvidia's GPUs are in high demand across various sectors, including gaming, data centers, and AI. The company's strong brand recognition and loyal customer base have also contributed to its success. However, it's important to note that Nvidia's stock performance hasn't been entirely consistent in recent quarters. While the company has generally exceeded earnings estimates, there have been instances where its stock price didn't react positively to positive earnings surprises. This suggests that investors may be becoming more discerning, looking for more than just earnings beats. Despite these recent inconsistencies, Nvidia's long-term track record remains impressive. The company has consistently grown its revenue and earnings, maintaining a strong position in key markets. This suggests that Nvidia is well positioned for continued success in the years to come. Expectations high. What analysts predict for Q4? As Nvidia's Q4 earnings announcement approaches, analysts have set high expectations for the semiconductor giant. The consensus estimate for Q4 revenue is an impressive $38.13 billion, representing a remarkable 72.5% year-over-year growth. The earnings per share, or EPS forecast, is equally impressive. Analysts predict an EPS of 85 cents, representing a 63.5% year-over-year increase. These expectations reflect the continued strong demand for Nvidia's GPUs, essential components in various high-growth markets like gaming, data centers, and AI. Nvidia itself has set a revenue guidance of $37.5 billion for Q4, with a plus or minus 2% margin. This guidance suggests that the company is confident in its ability to deliver another strong quarter. However, it's worth noting that Nvidia's guidance is slightly below the average analyst estimate. Whether Nvidia can surpass these high expectations remains to be seen. The company faces challenges such as supply chain constraints and increasing competition. However, Nvidia's strong track record and dominant position in key markets suggest that the company is well equipped to navigate these challenges and deliver another impressive earnings report. Reasons for optimism. Why Nvidia's future looks bright. Despite the high expectations, several factors contribute to a sense of optimism surrounding Nvidia's future. One significant driver is the staggering demand for the company's latest Blackwell GPUs. This high demand, exceeding supply, indicates a strong market appetite for Nvidia's products. Further fueling optimism is the continued commitment to AI investment by major clients like Amazon, Microsoft, Google, and Meta platforms. These tech giants rely on Nvidia's GPUs for their AI infrastructure. Their sustained investment signifies a long-term growth opportunity for Nvidia in the rapidly expanding AI field. Adding to the positive outlook is the performance of AMD, Nvidia's primary competitor. While AMD has reported strong growth, its figures fell short of market expectations. This suggests that Nvidia might be capturing a larger share of the market, reinforcing the company's leadership position in the GPU space. These factors, combined with Nvidia's history of innovation and strategic acquisitions, paint a bright picture for the company's future. While challenges remain, Nvidia appears well-positioned to capitalize on the expanding applications of its technology in AI, gaming, and data centers. This potential for continued growth makes Nvidia an attractive prospect for investors seeking exposure to the thriving tech sector. Section 5. The Long View, Navigating Valuation and Demand Concerns. While short-term prospects for Nvidia are promising, long-term concerns exist. Some analysts worry about the company's high valuation. Trading at 32.6 times forward earnings, Nvidia's stock is seen as expensive. This high valuation increases investor risk. Any growth slowdown could lead to a significant price correction. Another concern is potential slowing demand in key markets. Economic slowdowns or tech shifts could impact future growth. Cloud gaming could reduce demand for high-end GPUs. However, AI advancements drive demand for Nvidia's solutions. Continuous AI innovation could offset slowdowns in other markets. Nvidia's R&D and strategic acquisitions strengthen its position. The company invests in cutting-edge technologies. This positions Nvidia as a leader in the tech landscape. Despite concerns, Nvidia's long-term prospects are promising. Its market position, innovation, and exposure to AI make it a compelling long-term investment. Section 6. The DeepSeek dip, a temporary setback? Recently, Nvidia's stock experienced a dip due to concerns about competition from DeepSeek, a Chinese AI company. DeepSeek's emergence as a potential rival sparked fears among some investors. They worried that Nvidia's dominance in the AI chip market might be challenged. This dip, however, proved to be temporary. Nvidia's stock price has since recovered most of its losses. This suggests that the market doesn't perceive DeepSeek as an immediate threat. It also reflects continued confidence in Nvidia's ability to maintain its competitive edge. It's important to acknowledge that competition is a constant factor in the technology industry. The emergence of new players like DeepSeek highlights the need for Nvidia to remain agile and innovative. The company must continue to invest in research and development to stay ahead of the curve. Despite this recent dip and the emergence of new competitors, Nvidia's long-term outlook remains positive. The company's proven track record, strong market position, and commitment to innovation provide a solid foundation for future growth. While competition should not be disregarded, Nvidia appears well-equipped to navigate these challenges and maintain its leadership in the AI chip market. Section 7. The Allure of Short-Term Gains versus Long-Term Risks. The upcoming earnings announcement has fueled speculation about short-term gains in Nvidia's stock price. If Nvidia exceeds expectations, investors could see a significant jump in the stock price. This potential for quick returns is alluring. However, chasing short-term gains can be risky. Stock prices are volatile and influenced by various factors. Betting on a single event carries uncertainty. A prudent approach is to focus on Nvidia's long-term prospects. Nvidia operates in growing markets like AI, gaming, and data centers. The company has a history of innovation and delivering value. Nvidia has the potential for significant long-term returns. Weigh short-term rewards against risks. A long-term strategy focused on fundamentals is more reliable. Section 8. Final verdict. Should you buy Nvidia stock before February 26th? The decision of whether to buy Nvidia stock before February 26th is a complex one. There are compelling arguments to be made on both sides. On the one hand, Nvidia has a history of exceeding earnings expectations. This could lead to a surge in the stock price following the announcement. The company's strong market position and growth prospects also make it an attractive long-term investment. On the other hand, Nvidia's stock is not without risks. The company's high valuation could limit upside potential. Any disappointment in the earnings report could trigger a sell-off. Additionally, competition in the semiconductor industry is fierce. While Nvidia is currently a leader, its dominance is not guaranteed. Ultimately, the decision of whether to buy Nvidia stock before February 26th depends on an individual investor's risk tolerance, investment goals, and assessment of the company's prospects. Investors seeking short-term gains may be enticed by the potential for an earnings-related stock surge. However, long-term investors may prefer to wait for the earnings announcement and assess the company's performance and guidance before making a decision. It's essential to conduct thorough research. Consider the factors discussed above, and consult with a financial advisor before making any investment decisions. Section 9. Disclaimer. Proceed with caution in the stock market. The information provided in this essay is for informational purposes only, and should not be considered investment advice. Investing in the stock market involves risks, including the potential loss of principal. Past performance is not indicative of future results. It is crucial to conduct thorough research, consider your investment goals and risk tolerance, and consult with a qualified financial advisor before making any investment decisions.